the competition ends in September, so you will have a few opportunities to both receive your statements and make trading adjustments as well. Reese, you have a question?
Good evening. Do you want me to type it, or can I explain it?
You can go ahead.
Not specifically with regards to the competition, but my question is aimed at the expert trader. How do you come around the fact? Because I mean, you've been trading for 20 years. I'm sure you've come familiar with brokers that use the term abusive trading. So, as an experienced trader over 20 years, what have you done in order to combat that common occurrence, especially with South African brokers? We see it a lot. So, do you recommend using a B book or an A book, an international broker? How have you overcome that challenge?
I make use of Standard Bank's online trading platform in South Africa. They're very hands-off. They do provide all the statements that you might need for tax purposes, etc. But you never receive anything from them prompting you to do anything, or specials or any of that kind of nonsense. I find the international ones do that. Interactive Brokers is okay internationally. If you have to, but I mean, at the moment in South Africa, I think honestly we have the best and simplest platform available. It's very similar to Robinhood in America. It's an extremely low-cost system, easy equities. They do have offerings, but again, they're not incessant or pestering like you often find in the industry, especially in the crypto industry. These are serious people using these websites or these platforms. With regards to overtrading, I think if you survive the initial point of overtrading, some people overtrade in the beginning, some people don't trade enough, some people invest too little, some people invest too much. It depends on your personal journey. But I think that the risk management process, if it is brought to its proper point, it essentially self-corrects overtrading. Your liquidity balances must be maintained in a professional manner in order to run the portfolio like an engine, like a small business, where you manage your cash flows, and so you're prevented from overtrading if you position size correctly. You scale into trades rather than buying them outright, and you take your time and you take your opportunities. It shouldn't be, the thing is, there are so many opportunities in the market. You don't have to be in a rush. Every single day there's some kind of terrible disaster that wipes out 25 stocks. There are 10,000 stocks in America. There's no point in trying to chase every one of them. You just don't have the money. Even if you had all the money in the world, you wouldn't have the money. They're just too commonplace. Every day Mr. Market comes, he knocks on your door. You don't have to take what he's got to offer. He's coming back tomorrow every time, never offended. So find yourself good, rare, special opportunities and only ever capitalize on those opportunities. Why waste your time with anything else? If that's 3 stocks, it's 3 stocks. If it's 15 stocks, it's 15 stocks. If you're in a market that's been a bear market for a year, like we had from the beginning of 2022 to the end of 2022, then you'll have 15 options that are like really fantastic value. But if you, if you find yourself forced into buying stocks, or you find like, okay, people want to take action. They want to feel like they're being proactive. They want to get in there and but it's just unnecessary. And also it limits your per stock research time, distributes your energy and your emotional energy. So yeah, just, if you find a wonderful opportunity, don't put a thimble out, put a bucket out, and then sit back and build the position over time. If something, eventually something always happens, because in the end, stocks can only go up or down. They're not half as complicated as anything else in the world. When you run a business, there are infinite number of variables you've got to consider. Stocks, traders like to make out like they're the smartest people on the planet, and they're all these quantitative analysts, and it's so amazing, mathematicians, but these things can only go up and down. It's really that simple, and they are only numbers. So you can, just find yourself a decent business at a decent price. If possible, get it at a fantastic price. and then go for it.
Okay, so we have another question. Okay, can you explain the concept of a bear market and a bull market?
So a bull market is a market that's going up, like a bull, when it's trying to hurt you, pushes its head up, and when a bear wants to hurt you, it brings its arms down. So a bear market is when the market goes down. When a person is optimistic on the market, you refer to them as a bull, and when they're pessimistic on the market, you refer to them as a bear. So if you're on Twitter and you're watching the fin twits, then they'll be like, this guy's a bear, this lady's a bull, and there'll be a constant back and forth and to and fro between them, and it's the never-ending backwards and forwards. But that's because the market's an auction, in essence, and these variables, they're so numerous, they're affecting these stocks, and but in the end, like I say, the stocks are actually quite simple in their nature. So most of it is driven by sentiment and flows. In the beginning, when you invest in stocks, you're told to focus on fundamentals. Eventually, they'll tell you to focus on technicals. But the truth is, stocks are driven by fund flows, money supply, cost of capital. So keep an eye on those things. At the moment, cost of capital is quite high, and markets are quite high, so that's quite unusual. So that could indicate that we're in trouble, or it could indicate that something else is misleading us. How do you know if a stock is well priced? It's very hard to determine what's referred to as the intrinsic value of a stock. Believe it or not, there's a lot more to buying stocks than just whether they're priced properly. A lot of the stock's movement is based on statistical variables like standard deviations. So no matter how expensive or cheap a share is, if it had to experience a very short-term but very extreme fall, for that period following, it would likely, on a statistical basis, be due some kind of a correction to the upside. So those things all have to be considered. But in the end, you want to buy stocks that are not necessarily, they don't have high price to earnings ratios or price to revenues. So in South Africa, we have some very expensive stocks, and expensive stocks can get more expensive. So they're not necessarily bad investments. They're also probably expensive because they're good quality. So sometimes when you buy a share, it's meant to be cheap. And sometimes shares can stay cheap for 30 years. And then your money just sits there dead or dormant. So, and also, just because you realize that a stock's cheap doesn't mean everyone else is smart enough to realize it for the next 3 years. So what is cheap or expensive? I don't know. The question is whether a stock is overbought or oversold. That's the question you've really got to ask yourself, especially at the durations of this competition. It's extremely important to remember the term that you're investing in. So you can't make a decision to buy, for example, gold for 20 years in this competition. You have to buy stocks that you feel in the relatively short term are going to experience an upside movement sufficient to win you the competition. What would the outlook be for the rand in the near term?
And would it be worth holding?
Rand hedges in the short term, strengthening in the near term, especially with inflation starting to come down and possibly also there be no further interest rate hikes. Yeah, I mean, I think that's actually a great thesis. What happened today was that we raised interest rates and the rand actually weakened a great deal today, and that's quite surprising because normally you can think of the interest rate on a currency as the dividend on the currency. So if they raise the dividend on the currency, your expectation would be that the currency would become more valuable or strengthen against the dollar. In fact, the opposite happened. So that was quite confusing to traders today, because most of them who positioned themselves in a theoretically correct way actually turned out to be wrong. You know, it depends on your view whether you should hold those rand hedges. The rand is very oversold at the moment. So, you know, do you want to now buy stocks that are benefiting from something that's already quite well into it? But if it does in fact get worse, or we have some kind of a major power crisis or something, you would quite literally be hedged by buying those shares, because they do, as you allude to, they earn their money from foreign countries. So yeah, but I do think inflation's probably due to come down, especially in South Africa. This kind of increase in debt repayments that results from this takes cash flow out of people's pockets, and that obviously hurts the economy, and that obviously cuts in inflation, and that obviously then allows the SoM a little bit more wiggle room to not raise rates so quickly. And America for the same.
What social media group do you recommend that we use to stay in the loop? Are they reliable? I know influencers can spread false news to mislead shareholders so they can take advantage.
Okay, it's undoubtedly Twitter. Reddit's also fairly useful, but you have to be quite an advanced trader to make any sense of what they're saying. Half of them are crazy. But Twitter is a wonderful place to go. 78% of all traders of all levels use Twitter as their primary news source. Not just because it's a bastion of free speech, but because FinTwit is an extremely dynamic and interesting place. With regards to the people who, you know, the snake oil salesman, the nice thing about FinTwit is the people on there, they don't take kindly to that kind of thing. So, you know, you get called out very aggressively if you do that kind of thing. And also because the tweets are time-stamped and everything, you know, there's no going back. You say you bought something, you bought it. You say you didn't buy it, you didn't buy it. So just an unbelievably brilliant resource. With incredibly talented local traders who are retail traders like you and I, and institutional traders, and just a really incredible crowd in every gender, culture, you know, age group you can ever imagine. This common interest brings them together. It's a lot like you know, it's a lot like golf. You know, you're not competing with one another. You're just all against the course, and there's a great family vibe there. It's awesome. But they're tough people. Some of them are free. They've literally freed themselves from working, and they trade for a living. Probably work an hour a day.
Yes, there was that. The US